Everybody, thanks for joining. Today we're going to be looking at the worst performing stocks in the S&P 500. We could look at the holistic market and we'll see stocks that essentially went bankrupt or almost bankrupt. And obviously, those are going to be the worst performing stocks. We likely do not want to get into those. However, we'll be looking at the top 500 stocks that are within the S&P 500 to see if there is an arbitrage opportunity to potentially look at owning that stock for 2025 going forward. If the company is doing horrible and is expected to continue to do horrible, it will likely fall out of the S&P 500 and be replaced by a better performing company. So what we're going to do is we're going to shrink our heads and hit the subscribe button and the thumbs up button while we do this. So we're going to go to finviz.com and we're going to open up all filters because we want to see everything. And we just want to go down here to look at our potential columns, and you don't see the year-to-date performance. So what you're going to do to do this, you're going to go down to this custom option right here. And we're going to hit this settings button. This is a button we did not see on the last screen. Now we're going to do a search for performance, and you can see there's performance for a year or performance for year to date. We want to make sure to select performance year to date. If we select performance for the year, I'm recording this on November 3rd, so it would only look from November 3rd, 2023 to November 3rd, 2024. We want year to date, so stocks that have been doing bad since the beginning of this year. So we've got that now. We can collapse our settings. And now we can go back to our filters here. And if we scroll down, we can see our performance year to date. So now what we're going to do is we're going to look at the index S&P 500. You can also do this for the NASDAQ, the Dow Jones, the Russell. I think there's only 30 stocks in the Dow Jones. So we can just take a look here. There are only 30 stocks, and the worst performing year to date. Any guesses? I don't know. Intel, and then Boeing, and then Nike, the Dow, and then Merck, McDonald's, Honeywell, Johnson and Johnson. Johnson & Johnson is actually positive 2.2%. But now we're going to move to the top 500 companies. We're not looking at 30, we're looking at 500 now. So S&P 500, let's see what we got. Walgreens Boots Alliance. This company, in my opinion, needs to be kicked out of the S&P 500. I'll show you. Estee Lauder, this one is a long-term turnaround, in my opinion. There's going to be some benefits because a lot of these products are from China. China's doing a stimulus injection of the economy. We could see a turnaround. It's a long-term play. Intel, we just saw Intel. Dollar Tree, that one is a huge signifier. That usually lets us know what's going on with the economy well in advance. And then Moderna, Dexcom, Humana, Boeing, Dollar General, Lululemon. Look at that candle. I actually have a Lululemon. I have Lululemon, a Lululemon position in my Robinhood account. Again, trading $25 a week. I'm up on that position, so this is a fantastic turnaround play here, in my opinion. End phase, it's in a long-term correction, in my opinion. So I think Walgreens should fall out of the S&P 500, and I say that because look at this. This has been a freaking loser for the last almost 10 years. The last high of Walgreens Boots Alliance was August 2015, and it's just been going down ever since. Now down to $9 freaking dollars. How insane. So this is just horrible. I mean, they're doing okay. Like They need to cut this dividend right here, and they need to put that back into their company. They may have already done that. I hope they do. They're over leveraged. They have physical stores. They need to cut some stores. They need to put this cash into their company. This management, man, they're not even profitable. Gosh, it's just a long-term train wreck. It could be getting ready to reverse here. I mean, look at this insane volume, but man, this is the biggest loser. I wonder what we get from our stock price calculation here. Let's blow this up for you guys. Okay, let's run the numbers on this because I want to see what we project for this stock. So the market cap of this company is 8,180,000,000. Income is negative 8,636,000,000. Insane. They do 147,660,000,000. Okay. Gross margin 16%. I mean, for big box retail companies, I think they get targeted a lot too by thieves. I don't think that it truly affects their margins. They can do write-offs, tax purposes, etc. But we'll continue down. Okay, Q1 2024 they did 37 billion. Q1 2023 they did 34 billion, so they're beating by almost 3 billion there. Q2 2024 36.3 billion compared to 35.4 billion. So again, they're doing slightly better. However, their gross profits are actually less year over year. For the last 3 months, the profits are less because they're spending more money to make more money, but profitability wise, they're not as efficient as they were last year. So that is a bummer for them and for shareholders. Gross margin's going down too, right? We look 19 compared to 16, right? Yeah. 19 compared to 16, 18 compared to 17, 16.9 versus 16.1, 16.5 compared to 15. Yeah, so they're becoming less efficient, unfortunately. Walgreens, the company is even selling their stock. Is that what this is showing us? The CEO did buy some. That's a huge positive, but dude, he bought it at $24 and yeah, not looking good, especially when Walgreens, the company, is selling on stock. That is ridiculous. So, not good. Let's look at the balance sheet. All right, let's continue on with our calculation. They have $3,109,000,000 of cash. Total assets 81 billion, total liabilities 68 billion. So not bad. Assets are better than liabilities. That's always a positive. Total debt, or I'm sorry, yep. Total debt was 29 billion, 882 million flat. All right. They need to cut that dividend and they need to put it back into the company because that's just what needs to happen. If they're going to take a hit on the stock price, don't mean to break it to you, but the hit's already happened, going from $90, 97 down to $9. This would probably have a positive reaction on the stock if they did come out and say, hey, we're going to cut the dividend to make our business more efficient and to turn the stock price around because it's unacceptable. Taking accountability and responsibility, that would be huge for the stock. But of course, will it happen? Okay, continuing on, we have 864 million shares outstanding flat. That is a potential stock price of $139. Did I miss something? 3.1 billion, that was right. Debt was 28, yes. Sales, that was correct. 147 billion. So this stock is severely undervalued, but I think it's uninvestable. Looking at the quick ratio, they're way over leveraged. They're paying out dividends. I mean, let me just see. Did they cut the dividend? Dividend. Please tell me. They declared a quarterly dividend. Is Walgreens ultra high yield dividend in jeopardy again? Yes, it should be. They need to put this money into their business, man. This is they make 147 billion, they lose 8.6 billion. Again, they're okay, but they just need to really they need to turn the ship around. Um, if we're gonna go ahead and see what institutions are doing. If this company is truly severely undervalued, like my calculation is saying, this institutional ownership should be much higher than 61%. Old data shows 61.58. New data shows 66.5, and we're actually, let's see. We are getting back to December 2021 levels. Let's just go back December 2021. Okay, right here, well, it would have been over here. So institutional ownership has gotten back to this same level when the stock was about 50 bucks. So that is good. And they're killing it year over year. 147 billion in 2024, 139 billion in 2023, 132 billion, 132, 121. So the company is continuing to expand revenues, but this dividend going on. I mean, let's see what the big boys and girls are doing here. State Street reduced 20%. Don't blame them. Vanguard reduced 4% earlier this year. Don't blame them. BlackRock increased their position 8% February or January, end of January this year. Let's see how they're doing. Okay, so BlackRock added at $23. Oh my God. Horrible. And then their ETF added 152 shares. BlackRock's. I just want to see if there's any companies that took a big. The last company that took a big position, I mean, 79,000 shares, $961,000, August 2024. Jan, Feb, March, April, May, June, I guess around 11 bucks. They're not down too bad. But geez Louise, that's a call option. 15 calls. A call, 141. Put. These guys are up big. Foundry added 38,000 shares in August, which we just looked at. So they're down. A lot of big money is down here. All these white columns represent hedge funds, institutions, banks, mom and pop shops, either adding or reducing their position. So you can come in here and look at that for yourself. The site is fintel.io/SO/US/WBA, which is the ticker. You can always just replace the ticker here. You can do Intel, you can do Johnson, J&J, Tesla, TSLA, Amazon, Apple, any company you want. So is Wall, I don't do the research on companies. I usually let the charts tell me what's going to happen. This actually looks pretty promising in terms of potential turnarounds. Huge relative volume. Let's see, relative volume should be high. 0.59. Let's go on the daily. Let's look at the weekly first. We should be seeing relative volume over 1 now for the daily and the weekly. Okay. It's because Friday, our closing volume on Friday was 12 million. Normally there's 20 million. So, I mean, it's trying to find a base here. Wow, that was a lot of shares traded. 225 million shares traded, mostly on the buy side. October 18th. Wow. Good for them. So if you are, I mean, honestly, you could just invest in the S&P 500 and you'll have exposure to Walgreens Boots Alliance. I invest in the S&P 500, so I have exposure to this. if you want to take on the extra risk and the volatility, you could invest into individual companies. That's a you thing. But what you want to determine if you're going to be doing some homework, number one, what does their path to profitability look like? We want to see this negative 8 billion turn into positive millions. And let's just make sure this was not a one-off here. Net income. I kind of want to say maybe it was a one-off. You can see the negative 5.9 billion here, but we have the negative 3 billion here. Also negative 3 billion here back in November 2022, which was Q4 2022. So no excuses really. They need to really just get their priorities straight. They went from negative 180 million Q3 2023 to negative 3 billion in Q3 2024. So not a one-off. They really plan towards profitability, number one. Number two, come on, see if they can cut that dividend, put that towards their debt, take that money and pay themselves seriously. Number three, what else do we want to see improvement on? Improve that quick ratio, man. Give yourself some more cash, reduce the debt if you can. Find ways to become more efficient. So what I mean by that is they're paying 31.9 billion to make 37.5 billion. Find a way to reduce liabilities and also increase assets at the same time. And this is what I'm talking about. Assets went down from 82.9 billion to 81.0 billion. That's a decrease of 1.9 billion, a loss of assets, while liabilities increased 1.3 billion. That is a recipe for disaster. If their assets increase 1.3 billion while liabilities decrease 1.9 billion, they have not found their secret sauce yet. And we can see assets decrease here to here, which is not bad, but we see a decrease here. So liabilities from Q1 2024 to Q2 2024 decreased about 1.3 billion, let's say. Assets decreased about 1.3 billion as well. So it looks like they may be getting close to their secret sauce. Let's continue to look really quick. Liabilities from Q4 2023 to Q1 2024, 70 billion in liabilities down to 68.8. So that is a $1.2 billion decrease in liabilities. However, assets decreased 13.6 billion. So not good, man. Not good. And then just going back a little bit further, Q3 2023 to Q4 2023, liabilities increased 1.2 billion roughly, while total liabilities increased about 1.86 billion. So they don't have the secret sauce yet. It really looks like they're almost at the cusp of figuring it out. But Q4 2023 to Q1 2024, that stung a little bit. Assets went down a couple billion, but I mean, liabilities are literally back to what they were in Q1 2024, while assets are down 3 billion from what they were in 2024. So they're still really working on it here, and I think that's something they need to focus on as well. So if you're doing your homework, that's what you want to look into. Are they finding a way to increase assets while decreasing liabilities? As of today, they're still trying to figure out their sweet spot. Maybe they're getting close. That's going to require some homework on your part. The chart usually tells you everything you need to know. And it looks like, honestly, we're seeing some consolidation here. Momentum is rising. Our strength has increased on the weekly. Our relative momentum is coming out of the ocean under the depths of the sea. So potential long-term consolidation going on at these levels. Is there a turnaround yet? Not yet, but it looks like things are looking better. So Look at those three things. Institutions and hedge funds are adding, so that is a positive sign. Big money is putting their funds where their mouth is, so that's a positive there. I think those are the main things I would check for, really. Anyway, if you made it this far, thank you so much for watching. I really appreciate you. Take care, and I will see you in a couple days. Peace.